Hey, what's up traders, and welcome to this week's market analysis report and video. Now, we've got a loaded macro week ahead with US CPI, PPI, UK GDP, and key rotation signals already showing up in the commercial order flow. This is the kind of setup where markets either stretch or snap. In this video, I'm going to walk through a few things with you. Number one, the key macro events that are likely to drive the tape. Two, what the commercials are doing in the background, and in particular, how that's shaping our bias. And number three, four setups that we're stalking hard this week. Those four setups being in the NAS 100, entity versus the Japanese yen, crude oil market, and gold. Now, if you're a member, you've already seen the full written report. That's fine. This is your walkthrough. If you're not a member, this will give you a solid view into how we frame up the week ahead with intent, not guesswork. I'm your host, Max Norbury. I'm a real money trader and founder of the Underground Trading Group. And what we do here isn't forecast fluff or provide bullshit noise. We track real market structure, institutional activity, and high conviction positioning. And then we trade it live. So let's break it down. Good afternoon, ladies and gentlemen, and welcome to your Markets Now session today on the 9th of June. Ready and raring to go for another week in our markets this week as we approach US CPI day and, of course, PPI on the Friday as well. Apart from that, it is looking a bit slow in the econ arena, but in general, I think it's going to be good. Hopefully, we're going to see a bit of an improvement from last week. We did see a small, modest return last week, but it certainly didn't come without its issues. It was a bit difficult. How is everyone doing though? Before I get on with that, everyone have a good weekend. Good couple of days away. All good, Scotty D. Good. Glad to hear it, mate. Good, mate. How about yourself? Yeah, not too bad. Thanks, Braden. I'm glad to hear you had a good one, buddy. Yeah, not too bad over here. What we're going to do, as we always do, we're going to have a good market report session. We're going to dig into the report, see what's occurring, and go through all the bits and pieces, look at the macro theme for the week. We're going to take a look at the four primary market report trading opportunities. Also have a quick scan over at the commercial liquidity stuff as well, and have a think about where we're going to particularly be looking ourselves this week to make some money. I mean, look, ultimately these indices now, I think it's been 2-3 weeks running, have been seriously, I think I've said it just here somewhere, Forex commodities basket. Yeah, so I've said it just here. Forex and commodities baskets have been propped up essentially by our exposure to the indice markets. And that's how it's been now for a good couple of weeks. With exposure in the indices at 61%. I think last week it was 60% or something, or 64%. I can't remember what it was now. But yeah, it was definitely in the 60s. And we're really seeing that fund performance being propped up ultimately by the indices gains, where the other asset classes have been struggling, and maybe they haven't been struggling, maybe it's been us, but I think based on last week, especially on our reflection period where we were working our way through all of the positions that we'd taken and had, we came to the conclusion that it must have been 60-70% of the trades that we were taking, especially Wednesday, Thursday, where they'd just been wicked in and then just gone straight back out again on the stop loss and just moving along sideways. Like our Aussie NZD, for example, last week, it spent the entire week in a 15-minute range. A very, very small, quiet range in market state structure the whole way through. So we're just not seeing the kind of push that we want from that nice trending price action. Or even, look, we love ranges here as well. We can adequately trade a range, but the ranges aren't even playing ball half the time. So, it will be interesting to see if on Friday when we have our next reflection period about how the week's gone. If we're going to look at another week where the indices have just really sort of towed the line, so to speak, and forex commodities have fallen by the wayside. So anyway, that's I've ultimately covered off the portfolio breakdown there. So going down here, obviously last week's realized growth 1.98%. It was actually, on reflection, it was quite structured. It was quite stable. We had a growth day of 0.6% or whatever it was on the Monday. Tuesday we had a drawdown period 0.49. Wednesday we saw a little bit more, 0.7 I think it was. Thursday was a break-even day. It's a tight. We made 0.01 on Thursday. Great day. And then on Friday was the best day of the week on that one, and that was like 1.1%, I think. So it was all right. It was all right, but it wasn't anything huge. We added another 9 positions to the long. Another 12 positions long and 9 to the shorts in terms of trading volume. And ultimately, guys, if you had bought in at the beginning of the week and sold at the end of the week, you would have made more money trading the S&P than you would have being stuck in the UTCF. That's great. But not as much as the UK FTSEs. That's something. So moving down into the good stuff there, market trends and opportunities this week. NAS one, I'm not going to read out, obviously. If you guys haven't downloaded the report yet, then I will leave something for you for the imagination. So you can check out that after the session, of course. But NAS 100, New Zealand dollar versus Japanese yen, US crude, and gold, all of them are all at major decision points. Every single one of them this week. So, and it's not just these 4. It's actually quite a number of assets, and I actually make a mention of that in the first paragraph regarding the NAS 100 there. So I say, last week was a lot of mixed volatility and a lack of follow through, which brings us to the decision at hand. And that's that's not just the NAS 100, but that is many of the trading assets that we focus our attention on. So we've come to these points in time now where the market is at liquidity structure across the board. So we are waiting to see whether or not we're going to get bullish breakouts. Obviously for the longs, we're going to get those, the nice follow through up to the next major point of inflection, or it's going to be a rejection week where we see everything actually come away from their respective liquidity points. It's absolutely fine for us. We almost want to be in a situation like that. We don't like being halfway through a trending market because we like buying at the beginning and selling at the end. We don't like being halfway in a range because of the same principle. We don't like shorting in the middle of a range. The range median's off limits, generally speaking, to us. And so being at decision points across the board means that no matter which way the market goes, as long as we have built in our structural points for the the access points, so long as we know how to gain entry to the trade idea, we're in a great position, because that way we're going to have a lot of opportunities this week. So that's what I'm hoping. What I'm really hoping for is the market has the follow through. If the market has the follow through, then we're going to see some money on the table at the end of the week. If it just really relaxes and we don't see much movement at all, or there's nothing major driving the markets at the moment, then that's going to be an issue. Now, I did touch base this morning on a bit of a fundamental element regarding gold, in the gold situation at the moment. Now, there's been a bit of an offset from gold investment, and it's been flowing into silver as a intermediary safe haven precious metal. Now, the reason that's being that I personally believe, okay, this is not like a fact, this is my 2 cents, is that the instability caused from the tariffs that have been hanging over the US at the moment, and of course, therefore gold, is creating this lackluster performance where we're just seeing market just dwindle along sideways. At the end of the last week, we did get a nice big sell-off at the end of the last week, but the majority of the week, Tuesday, Wednesday, Thursday, was spent in this tiny little pocket here that was untradeable. I mean, you would have been doing really, really well on a 1-minute chart if you were taking money out of the market in gold last week on a 1-minute chart, like I said. But silver at the moment is actually having. I didn't present silver here because it's not a common precious metal for for traders to be in. But you guys are going to have to tell me what your spreads are like. I mean, it's no more expensive for me to trade silver than it is gold, and I really like silver sometimes. But silver and the rally that it has had is very interesting because I usually will use silver as an early warning system for gold's moves. Now, the early warning, there's no way to tell how much time between silver rally or silver run being before gold does it. But I think silver's had such a rally recently that I think once the tariff feels or the tariff vibe starts to run its course and we start to sort of see the tail end of that, the rally that we'll have in gold as a result of that will match silver and beat silver. If it, for example, if it goes toe to toe, you will see a much larger move in gold as a result of this. So that's what I'm looking for. But I'm not looking for it this week. And so the trading margins that I've got available in gold at the moment are, as you see in front of you. I am looking for either the price rally from the inflection point we've just come from, and that price rally will be heading up to one of the levels up here, like 33.80 up there, or maybe 34, probably 34.30 up at the belly of that liquidity point up there. The alternative view is after we bounce back, we may hit that 33.80 level and we might actually come back down again. Now, of course, you can see in here I've got a lightly sketched trend at the moment that's forming. This is not a long-term trend or anything, of course, but the market has established itself within these two margins quite nicely. So I think if the market does reject that 33.80, the realized trading margin that we'll be working with this week will be between, say, 33.50 and 33, and that's the bracket, the margin that we'll be trying to work with and navigate through. So we want to see that lower limit of the trend kind of cleared away first, then we get a really nice path of least resistance and high probability setup, which is exactly what we want. Scotty D 0.015 or spread. Yeah, exactly, mate. Yeah, exactly. That's fantastic. Yeah, it's really good. So that's the gold. That's the gold setup. So now if we move down to market challenges this week, guys, the econ's actually pretty tired out this week. So last week we had a ton of stuff going on with the econ, but it didn't actually pave the way for many trading opportunities. Obviously, NFP was a bit of a non-impact event. We had a bunch of stuff going on before the NFP as well. Market challenges, though, this week, we do have a couple of big ones. One primarily really big one, and then followed up by another one, which is not so big, but still registered. So the United States CPI is the number one thing. Now, out of all the events that get fed into the model, it's only spat out the CPI, and it actually spat out the CPI at a 10 out of 10 this week. So it's a really big one. And then we've got the United States PPI, which is coming out on Friday, I want to say. Now, that's only the monthly figure, the PPI, but it's still registering as a 4. So I think we'll probably be in a position where we can live trade that on the stocks on Friday, possibly, and look for a stock market setup with that. So that would be quite nice as well to make some money off the back of that PPI, or at least the corrective after the initial sell-off takes place, or the rally and the pullback takes place. So moving down then to our commercial longs versus shorts in terms of the state structure volatility. A couple of notable call outs here, guys. Okay, there's a couple. Now the rest of them: gold 48.6, crude 51.13, and NTD yen at 49.94, completely stationary. Right, there's almost as many shorts as there are longs. However, the NAS 100 is registered a 56.87% buy-in this week, which is, I would say, since we've been doing the market reports every Monday, is probably the highest, if not the second highest ever registered print for commercial positioning, long versus shorts. So there is a hell of a lot of money in the NAS 100 at the moment, long versus short. Now, how this translates out, if this is going to be meaning that they're building up the markets at the moment, there's going to be a lot of pending orders and limit orders in the market to go long, at a certain level, which means they might never get triggered, or they might get triggered in the next, 24 hours or something. I don't know how that looks exactly, but it's very, very good at being able to tell you that it is going to happen at some stage in the next sort of, 5 to 7 days. I'll never forget the natural gas one where we saw the natural gas print. It was over 60%, like 64, 65% or something. And subsequently, in 3 days' time, the thing rallied 25%. So that's, it's really, really good. Really, really, really good. So I'm interested to see what that looks like at some point this week, if we get some crazy NAS 100 rally, or if we see a lot of shorts in the NAS 100 down to a particular point where all of the long liquidity can actually access the market and get involved. It could be one or the other, so we'll have to wait and see on that front. The second one, anyway, is the VIX Volatility Index as well, and that's printing at 44.47%. It's completely sluggish at the moment, so not very good for us as traders who naturally want to be hunting for that volatility and that momentum in the markets. It's not a great sign for the week ahead, but hopefully, we can see things pick up a little bit. I'm always trying to be optimistic. I'm always trying to be hopeful for some decent price action. So yeah, that's that. So moving down then to the third and final page here, guys, we've got the Economic and Order Book Impact Report. Naturally, the impact scale. This is broad market impact, not market challenges. The United States PPI on Friday is the differing one. It's actually a 5 out of 10 in terms of broad market impact, not just in the trading opportunities that we've presented here in the report. And then the United States CPI is registering as an 8 out of 10, which is broad market impact. So it's a 10 out of 10 in terms of the assets that we're looking at this week in the market challenge. But in terms of broad market impact, it's actually registering slightly less at an 8 out of 10 in terms of every asset in the markets that it will affect and how much it will affect it by. Going down into the money flow trends, notable call out again, indices 61.01% bought at the moment. Again, another really notable call out, something to pay attention to there, with currencies and commodities at the moment actually significantly more bought than we have previously seen. Currencies at 54.74, commodities at 55.16% short, by the way, not bought. So that's a 54.74% bought, and that one's, commodities looking very short at the moment. Lots of money against them. So I think, look, based on the commercial data that's in this report, I think it's going to be interesting to see how things play out over the course of the next 5 to 10 trading days. That's what I would say about it. I can't say exactly what day and exactly when it's going to be taking place, but based on this information that we have, I think it's going to be an interesting period to trade throughout the remainder of June. So yeah, I think we'll have to keep our wits about us in this environment at the moment. And then finally, coming down to the equities and industry, we've got some really interesting equities for you guys to check out in here. But the number one for this week, which is one that I've spotted, is Microvast Holdings, which is looking really, really good at the moment. So go and check it out. I've obviously listed out my stuff here. It stands out as a top small cap performer because it's backed by real earnings growth, structural margin improvement, and the analyst and investor repositioning. Its transformation from loss to profit, along with a 700 to 1,000% gain, makes it a rare standout in the clean energy space. So if you're interested, go and check it out. It's certainly a decent equity to consider. Nothing really to notice about the institutional buying interest by sector this week, unless you're well into biotech. That's the only one that I think I would call out. Semiconductors as well, possibly, but I think biotech's an interesting one. Maybe look for equities in biotech if that's your gig. I don't really know anything about biotech, so I can't comment, but there's a lot of commercial interest in it. So if that's where those guys are going, it might be worth a shout out. All right, so that's basically a run through of the market report there, team. Hope you appreciated it. Obviously, I hope you appreciate the report as always. It is available in the My Report channel, so if you go in there, you can download it at your leisure and take a look. So we'll flash over to the charts now. So now, this afternoon, we're not going to be building out our books at the moment, team. Okay, we're not going to be looking at the FX market. We're not even going to be looking at the metals or the energies at the moment, as we always do. Mondays we focus on our US indices, our European and US indices for that matter, and we leave the rest of the book building for Tuesday's session, then going into Thursday where we start to taper off. At the moment this week, I don't think that, I mean, especially with the econ that's available, we can flash over to the econ and get a little bit of a broader view on that there. But it really is looking quite tired. There's a lot of nothing going on, which is exactly the way I would explain it to you. A lot of nothing. So obviously Wednesday US CPI, we always have the EIA data out as well in the afternoon on the Wednesday. Moving into Thursday, we've got UK GDP. Now, UK GDP it's certainly worth taking note of, but it takes place at 7 a.m. So in terms of market impact and how it's going to affect you, it's not going to affect you. So, you know, that's why we don't want to fill your heads with noise. We want to keep things really nice and clear and well structured as much as possible. Moving into the afternoon on Thursday's trading, we got core PPI, of course. So it is Thursday. Sorry, not Friday. Of course, we have continuing jobless claims as well, but I don't think we're going to get a single nudge out of that one. And then moving into Friday's markets to tie up the week, we've got industrial production for the European Union with the ECB speech from Montagna, and that is it. That is literally it. And then we go down to the USA with the standard old Michigan consumer sentiment, but don't even worry about that one, team. So that's about it. Pretty quiet week. Big CPI, but pretty quiet week otherwise. We'll cover the CPI off. I will be looking at that one live. We'll be on Wednesday. Live trading session for it as well. Special event. So make sure you set aside the time if you can for that one. If not, it's fine. You can get it on catch up. The CPI this week in terms of core and base numbers are putting us in an interesting place at the moment, especially with the pressure on the Fed from the White House, because the forecasts at the moment say we're looking at a 0.1% increase in inflation for both core and base prints. Now, the annual, which is the biggest one, is a 0.1% increase, and the base annual is down here at a 0.2% increase. Very, very interesting indeed. If it does come out, I have no surprise why my economic model is suggesting that it's going to be a bang. Because if that is the case, we're probably going to see stocks dip quite significantly as a result. And things like the United States dollar probably have one hell of a rally, at least temporarily from that. Now, the DXY, just to put things into perspective, is running or has been running at a low for quite some time now. And we've been, you know, sort of stuck down here just underneath the big daily point of liquidity, just to give you some even broader perspective. That's where the dollar's been trading for a long time now. I think this week, if the CPI comes out quite bullish and it either comes out as forecasted or it beats the forecast, we could easily see DXY trading upwards of 101. Easily. So we'll have to wait on that one as well. See where we end up. Now, we've got that out of the way. Like I say, no energies, metals, and FX today. We're going to be building. Our books out tomorrow, flushing the old and in with the new. But this afternoon, we are going to be focusing on our beloved US indice markets, which seem absolutely chocker at the moment with TA. So all of that's old. I'm getting rid of it all. That's fine. Okay, so first of all, US indice. I want to get rid of that one as well. US 30 Dow Jones. Not particularly looking great. The structure here at the moment is not particularly looking great, but it's certainly something we can work with. I'm sure we can find the opportunity within the noise. Now, we've got a high up here at the moment. That's worth noting. We've got the low here as well. We've got the rebound. We've got the double retest of it. The market's been established between these points throughout the day today from 9 a.m. this morning when it broke into it. And we're essentially just trading between the, the sort of just below the midpoint of this big bar here, the open candle in the high, which again is quite interesting from a behind the scenes point of view. Now, I would like to trade this margin. If we go down to the 1 minute time frame, you will see that the availability here is good enough. It's established enough. Beautiful little order block there as well with a breaker structure point just above it. So if we say line ourselves up there and we use this as a breaker structure point, it means that our stop loss gets to be down here well within the liquidity, and it's going to yield us a pretty decent risk reward ratio, I believe. We have there with our stop loss maybe about here possibly. I mean, that's going to be a 1 to 2.2. You could go for something a lot bigger with the open volatility, but I probably wouldn't. It is a Monday. For the short between this margin, I would say, I think when you're looking at margins this small, I would probably say aggression is better. The only reason I say that is because you get to have a higher stop loss. That's the only reason. Otherwise, I'd be much more happy taking a short down here. But it is a relatively small margin to work with this afternoon, so we're going to have to be on our toes. We're going to have to be ready to make a move quite quickly. The target profit obviously at the floor. The stop loss for this one, we're going to be looking at about there. So I essentially want to clear out some of these highs. Let's just get rid of that. Don't need that one. So let's just tidy this up a little bit so we're not confused. That's one there. That is another in there. So that's the kind of trade expectancy that I'll be planning for the US 30 Dow Jones. Now, if you do want to take a short below, you can. It's a break, close, and a retest. Okay, so you do need the full part of the play. Your target for this one is going to be here. We can thin this out a little bit. We don't need it so incredibly wide. Okay, so that's going to be your target profit. The break, close, retest needs to come as a result of breaking through just at the belly. Let's say if we break this down into sections, that's the point in which I want to see a break, close, and a retest. So we'd be looking for the breakout down here, the retest of structure, and then the push down. So that would be the plan for that. And then we'd be looking at shorting the market anywhere sort of between that point and this point. So long as you've got a structural break, we can't say exactly where that's going to be right now, but it will happen at some point. And then you're looking at an approximate 1 to 2.3, grossing, 0.56, netting 0.54 as a result. Just broad strokes figures there. So that's looking quite nice as well. So that's going to be your Dow Jones. Let me take a download of that one and I'll send that over to you guys soon enough. Moving on to the NAS 100 then. Looking at the 15-minute time frame, top down first. We could arguably go to the daily to get a good understanding of where we are with this one actually. So looking at the daily here, very, very close to our all-time highs, incredibly close. And last week I thought was going to be the week where we saw it, but of course we didn't have a great trading week last week. The interesting thing is though, is we are staying firmly above this area here, which is the most recent point of liquidity. We had nice price action pullback number one. We had a secondary here as well after having a fake out. And then we get the break close and the retest, which we just recently had. That was Thursday last week of that point of liquidity. This confirms the commercial interest. So now we're trading at, where we are. So essentially what we're looking for is the breaker structure above that area to look at the trend continuation up to 22,080. Now we can't take that as a stock open trade. This has to be done as an intraday theme. It won't be done in the space of a couple of hours, even an hour. And it we'll be looking much more likely over the course of a day or two. The available margins for this afternoon, they're not completely clear. We'll be looking at that as the ceiling, and we'll be looking at that as the floor. So the margin and availability in the NAS 100 at the moment is actually very good. It's strong availability here. The downside, we're trading we're slap bang in the middle of it. That is the downside to this. We are neither at the high or the low, and we cannot be taking trades in the median of the margin. We have to wait for price to travel up here to where we know the commercial interest is, or vice versa, we have to wait for it to travel all the way down here, where we know, again, the commercial interest is. We know it's there because the chart tells us, right? So we're going to have to be patient with this one. We have to wait for the market to come up here or down here in order to take the trade. This area in the middle, just to be absolutely fundamentally clear, is out of action. Now, if you want to take either of these trades and the market does come up to this level or this level first, the break of structure access points to gain entry into the short is going to be that level in there. The access point for the long is going to be that level in there. So when you're taking the trade, this is the TP for a long. Okay, so you can we can change that. That's your long TP. This is your short TP. And this entry point. This is all of your trading margin, the whole thing. Okay, so that's what we're looking at for the NAS 100. Now, if we break out much longer than that, I'm not going to be interested. The reason I'm not going to be interested is because it needs a full break close retest of this level. By the time we get the continuation, you're going to be looking at a 0.8 to 1. And so that's not going to be good for the risk reward factor. The short would be okay, except for the fact that the last point of liquidity that was hit was the low. So I don't want to be going back down there with market exposure. I don't mind it going back down and then us buying it back and buying in where the cash is, because this is considered to be the cash rich area in the markets down at the lows. Reason being is because that's where all the orders are in the market, the pending orders, limit orders, you name it. But I don't want to have market exposure as the market's dropping back down there. We only want to be moving with institutional money, not against it. So that's my reasoning there. So let me download that one for you as well. Now finally, the S&P 500 here at the moment. Looking at this one today, not too bad. We've got a really nice break close and retest that we can utilize in there. Ooh, hang on a minute. Sorry, I forgot about that. Let's change that back to there. So we've got this area in here, which is actually, it's not perfect, but it's definitely something we can work with. We've also got the high on the S&P 500 at the moment, which is up there. Again, we've actually got not a bad trading margin. It's not too bad at all. Now, if we consider this the high and this the low, we're actually trading at the high already, and we have hit it. So what this means is if we get a break of structure point below, let's say this area in here, we can take a short down to the bottom. And that's not too bad. So at the moment, this is the no man's land. If you want to take a long and buy back the market from this low, frankly, you haven't got great luck. It is quite deep into the margin, but you still will be able to make it work, because that's the point there where the break of structure for the long is. You could, in theory, have your break of structure down here. But honestly, guys, I'm a little bit hesitant about doing that. I think if it comes down that low and then we get a break of structure here, I don't know. Let me work out the risk reward on it first before I give you the confirmed. Yeah, so 1 to 1.6 there, which means then I've got to have it there anyway, which is price action is likely to come back to. No, it's not gonna do. So we're gonna stick with that for the long, and then the long is gonna be from there to there with the stop loss at the 50% point-ish between zone 1 and zone 2. That's going to gross you maybe a 1 to 1.9, for example, 0.5, 0.49% on your account. And just so you know exactly where you're going with the short, that's going to be your target profit, entry point, and your stop loss at the 50% point between the structural breakout and the cash rich area above. I mean, that's going to yield you even less. Probably similar. So the S&P is looking okay. It's not the perfect one. None of them are perfect, that being said. The NAS 100 is looking really nice in terms of the availability, but it's unfortunately trading right slap bang in the middle of the margin. And the Dow Jones, finally, is also looking okay, but the margins are very, very small. So you've got 3 indices, 3 variations of the setup that we're going to be looking at this afternoon. Right? So that's where we are. It's definitely not going to be an easy ride today, guys. definitely not going to be an easy ride with what we're looking at here. So I'll download that one. I'll get those ready to send out to you. So now it's question time. If you have any questions, please fire them into the chat. Be happy to answer them. If not, then that's fine as well. It's almost 2:10, so we've got about 20 minutes to go until the US bell rings. Perfect time to grab your snacks and a cup of coffee before we get stuck into the session today, which hopefully goes quite well for us. So are there any questions at all, team? Yep, all good, Braden. You're most welcome, my friend. No problem at all. Matthew, all good? Yep, no problem at all. Excellent, guys. Yep, good. Look, I mean, to be fair, I'm here anyway. Even when I go quiet for the hour and a half at the market open, because I'm sat here sweating in my charts. Just send a message in. It's no problem at all, and I'll get back to you as soon as possible. All right, but that's going to be it then, team. I hope you've enjoyed today's session. Take care of yourselves out there. Good luck with the markets today, and I hope to see you again soon. Catch you then. Bye bye.